welcome. This is Jeff Guberman, CEO of Ivy Capital, and very excited to be here and to welcome Jerry Dunn, the CEO of A10 Capital, to join us. Jerry, thank you so much for joining. Jerry co-founded A10 Capital in 2007, and he serves as the president. He leads all the front-end business development and key strategy relationships. He's closed over 10 billion in capital market transactions and an additional 10 billion in commercial loans spanning specialty finance firms and top 25 bank platforms. He was honored as an EY Entrepreneur of the Year. He serves on the advisory board of the Kelly A. Bergstrom Real Estate Center at the University of Florida and is an active member of YPO's Real Estate Industry Network. A former Division I quarterback at both the University of Florida and Colorado State on full athletic scholarships. Wow. And he graduated summa cum laude with a BS in Business Administration with concentrations in finance and accounting and a minor in economics. Jerry is also a certified public accountant. So, Jerry, welcome. Thank you so much for joining us.
Thanks for having me, Jeff. Appreciate it.
Yeah, absolutely. So Jerry and I met at YPO a few years back, and then I was lucky enough to work with Jerry. He financed a deal that we bought that was a little bit of a messy deal. We bought a student housing property at Mississippi State out of receivership, and his team was amazing to work with, dealing with a lot of legal mess. And so we probably couldn't have gotten through that transaction with most other lenders. And so I was really grateful, and I'm excited to hear about your journey, Jerry. You've been doing this for a long time, but start at the beginning. Help us understand, how'd you kick off your entrepreneurial journey here?
Yeah, kind of take you from the beginning, but as you mentioned, I was fortunate enough to have a full athletic scholarship that paid my way through school when I otherwise probably couldn't have been able to go there. And while I was playing football, I really focused on academics as well, and was lucky enough and worked hard enough, I guess, to get straight A's and have a double major. And had a teacher who suggested that I poke around and look about getting involved as an investment banker on Wall Street. Problem was that most of those jobs were taken by Ivy League kids, and I didn't have that pedigree. But what I did have was straight A's in football. So I, at the time, sent a whole bunch of letters, flew myself out there, went through interviews, and was able to get hired on by one of the big investment banks and worked in New York for a couple of years. Um, as an analyst, I went through a 2-year analyst program, and during that period of time, I worked on a whole bunch of different things. And I was more the junior guy analyst doing pitch books and things, but it gave me an opportunity to kind of see the full spectrum of finance, from working on IPOs, taking private companies public, working on some M&A deals, and at that time, and that was in the early '90s, started dabbling I'll call it a financial technology called securitization, which was at the time a novel concept, but a really efficient way for specialty finance companies to finance their balance sheet. Probably the most obvious method for that is for residential mortgages. Those are financed through securitization, but that technology can be applied to different sort of asset classes. So anyway, started dabbling in that and met a couple guys that had moved, that worked at Drexel Burnham for Mike Milken in LA, had moved to all places, Boise, Idaho. They had family there, and they started a specialty finance company in the early '90s, and I was hired on as one of the first 5 employees. And I left my great job in New York to go to Boise, and I did it because I had a desire to learn how to become an entrepreneur. My mom was a math teacher. My dad was an accountant. I didn't have a family business, didn't really have any mentorship in terms of how you would start a company. And so my belief was that I needed to become an apprentice at a company that was a startup. And so I came here sight unseen just to kind of learn the whole startup thing and sort of soak it all in. So I came to Boise sight unseen, employee number 5 at this specialty finance company. Had a little tie into what I did in New York in terms of capital markets, but really it was a specialty finance, meaning a lending company, so a non-bank lender. And that business specialized in financing small businesses, primarily franchise businesses. So Burger King, Jiffy Lube, businesses like that that generated a lot of consistent cash flow. But they were underserved by banks. Banks didn't really understand the business. Banks, when they were lending on those businesses, focused on really the equipment of the business, the hard collateral, not really the fact that it was cash flowing business. And as a
Mhm.
result, it was really underserved by the banks. And so or this business came in and became one of the largest franchise finance companies in the country. And I learned all aspects of the business. Again, I came there just to be an apprentice and to soak it all in. Got paid very little to do it, but learned everything from how to source and originate loans, how to underwrite loans, how to close them, how to service them, and then more importantly, how to get the capital needed to finance it, because it's a capital intensive business, and that's where that securitization concept comes in. Anyway, fast forward after 4 years, that became one of the largest finance businesses, especially finance businesses for franchise lending, and a big publicly traded finance company acquired it. The day that that acquisition closed, the founders of the company, I guess, maybe appreciated the hard work I put in. I worked 80 hours a week like New York and for very little pay, but learned everything. They pulled me out and allowed me to basically spend 2 years searching for other underserved niches. So at that time, sort of, we've developed kind of a playbook, if you will, and I guess let me start by, or give you the punchline, which is the group of us, we've started four specialty finance companies, all based in Boise. So we kind of created this specialty finance ecosystem, A10 being the fourth. But we've applied kind of the same playbook through all four of them. And I should probably go through that playbook. Number one is we'd like to start finance companies in times of distress. So
Mm.
A10, the current business, was started literally within the same year of the great financial crisis and Lehman Brothers filing bankruptcy. That franchise finance company I mentioned was started in the early 90s when there was an S&L crisis. So that's kind of tenet number one, which is start a lending business in time of distress. Number two, find asset classes that are out of favor for whatever reason or misunderstood by the banking system. And number three is bring in partners like seed investors, actually founding partners in the business that own and operate the kind of assets you lend on, so you become an expert and more nimble than the competition or the banks in general. So in the case of the franchise finance company, one of the founding partners of that business had owned other franchise businesses, so we really understood how they operated. In the case of A10, a commercial real estate lender, we have two or three heavy hitters that are big real estate developers, owners, and operators that have been able to transition or transfer all their sticks and bricks knowledge into the company. So those are the three things that we've kind of
Brilliant.
looked. So start a business in time of distress, find a misunderstood or underserved niche, and then bring in partners. So um, going back to the franchise finance company, they sold the business, pulled me out of there, and for 2 years I uh, went on a crusade to try to find other businesses that fit that criteria, and stumbled across another asset class, which was, of all things, corporate aircraft. And basically, with their help and backing and my own sweat equity, built what became the second largest lender for corporate aircraft in the country. Same thing, we found an underserved niche. Banks were unwilling or didn't really understand how to lend on corporate aircraft. They were afraid they could fly out of the country and their collateral would just disappear. And so they were hesitant to do it. We started that in 97. There was a Russian debt crisis at that time, and long-term capital management hedge fund had blown up, and the market was in disarray. And then we brought in an operating partner that was one of the largest aircraft dealerships in the country that gave us the intimate industry knowledge to go do that. So I started that on a cardboard table, literally. I put all the money I had in my savings account, which wasn't very much, into the company, got some sweat equity, didn't take much of a salary, slept on a couch, rented a couch from a friend, to basically be able to afford to do this, and put it all on the line. got lucky, a lot of hard work. I think hopefully a little bit of strategy, and we built a big business. And in 2004, we had three very large national banks approach us to buy the business. One was MBNA, a big sort of credit card and bank business out of the East Coast. The second one was Bank of the West, a 25th largest bank based out of San Francisco. And the third was PNC Bank, which has now become one of the top five banks in the country. Um, PNC Bank ended up buying that business. And today it's still based in Boise, even though PNC Bank is based in Pittsburgh. But that unit has now become the largest by far corporate lender in the country. And a lot of the same employees that I hired back in the day are still there. So
It's
that was the
incredible.
second one.
Yeah.
Then I took a few, yeah.
How does that feel to look at this thing that you started, on a card table, and while you're not involved any longer, but just see that you've built something that is iconic and the largest.
Yeah, I think that's probably for me like the most gratifying. Certainly the sale, created a great financial reward for me, but probably more importantly is to know that a lot of the people that, started were with me building the business, starting the business are still at that bank and flourishing and running it. And kind of a fun story, my current day job, which is running A10 Capital, which is a commercial real estate lender, we lent to you. It's interesting, I would say probably 20% of our customers or principal or sponsors that are big real estate investors like yourself happen to
Hmm.
own or involved, have their own private jet. And I would say 20% of them, or almost all of them, have financed their jet through my old company, which is now called PNC Aviation. So that's kind of cool to see that come full circle.
I
And
love that.
then to drive home from work and drive by that old business and see if they're still there is kind of cool, I guess.
Oh, that's awesome. I love that.
Yeah. Yeah.
So that brings you to business three then.
Yep. So the third business, A10, I took a 2 year sabbatical, and I transitioned the business to PNC Bank. It took about a year. In the meantime, the CEO of Bank of the West, which was a top 25 bank at the time in San Francisco, he and I became close, and he hired me about a year later to come into that bank. At that time, it was about 65 billion in total assets, about 10,000 employees. They built that bank up through a number of acquisitions. Their leadership team at the time was starting to sort of time out and getting ready to retire, and they needed to bring some younger blood in. So I think I was in my mid 30s. He hired me to be his right hand guy. My
Mhm.
official title was chief of staff. So I moved from Boise to San Francisco, thinking that although I really was more passionate about starting businesses, if I could come in and be sort of endorsed by the chairman of a huge bank to maybe someday, if I prove myself out, to become one of the top leaders. I thought that was pretty interesting. So I took that leap of faith, moved to San Fran, helped support him, learned about the bank. But during that period of time, that was in '05 and '06, the commercial real estate CMBS mortgage market got extremely aggressive. So the Wall Street banks had started lending in commercial real estate through CMBS, got very aggressive. They were at that time, rates were not risk adjusted very well, so they were sort of giving the money away to real estate investors at very high LTVs and very aggressive credit. And that left us at the bank sort of fighting over riskier development deals. And I saw that at a very high level. And so it caused me to start talking to some of my old partners back in Boise at these other two finance companies saying, gosh, I think there's going to be a downturn in real estate, a down cycle. Let's get the band back together and start a commercial real estate lending business to take advantage of what we thought was going to be some banks getting put on their heels because of some of the risky and aggressive loans that they were forced to make because of CMBS. So 2 years into that, I um, had put a business plan together of what's now A10 Capital and left the bank, which was tough to do because I was in a good spot, but wanted to get back and do something entrepreneurial. So we got the band back together and started A10 in June of 2007.
Mhm.
So at that time, this was before the great financial crisis, but real estate
You
lending was,
predicted the great financial crisis, basically.
I don't know if I'd say I predicted it, but we certainly predicted a hiccup in the market. And so we basically hired some of our former employees at these other lending businesses and raised capital and put our own capital in it because of our track record, and then just waited.
Hmm.
And 6 months into it, Lehman Brothers files bankruptcy, and the whole market went into disarray at the time when we had dry powder. And so the first thing we did at A10 is we actually did something a little bit unique for a lending operation. We actually built the business backwards. So what I mean by that is we actually, instead of the first, most lenders will start originating loans, right? And then
Yep.
deal with it. We actually built our servicing team first, and specifically we built a workout capability. So we hired some former distressed debt professionals that came out of the RTC days in the 90s to build our business. And by the way, today we're now a rated primary and special servicer because of that. But we built basically the servicing operation first, specifically workout capabilities. And the first thing we did is we raised a small little opportunity fund and went out and bought distressed debt. So we bought loans from big banks like Bank of America for cents on the dollar. Had to go through a
Hmm.
foreclosure process to get to the property, and we're able then to work out the asset, add value to the property like you do, and
Yep.
ultimately sell it for huge profits because the purchase price was so low. So we did that with this little opportunity fund kind of in 2009, 10, and 11 when the market was sort of uncertain. And then starting kind of in 2010, we started dipping our toe in the water on the front end, or actually financing properties as a lender, because the market sort of, I wouldn't say it was stable, but we could at least see, properties get retraded at discounted prices, and that felt good to lend at that basis. And so we started dipping our toes in the water on the lending front, and that's what
Yep.
started A10. So initially um, we've always targeted sort of middle market lending, but we were at the very low end of size there. At that time, we were probably 3 to 10 million at the time, which is pretty small in real estate lending. But there was almost no competition at that time. All the banks were in deep trouble. If you recall, every Friday, the FDIC announced a shotgun sale of failed banks to a good bank, and almost every Friday there was, 2 to 10 banks getting sold. And during that period of time, no one was lending, right? But we had this dry powder. The only thing was the pipeline or the demand for our lending product was more than the capital that we had that we bootstrapped. It was ourselves,
Hmm.
family office. So in 2012, we had a decision to either kind of stay relatively small or try to grow a bigger business, but that business requires capital. And so we at that time made a decision to bring in private equity. So in 2012, we brought in HIG Capital, which is now one of the largest private equity firms based out of Miami, and they made an growth investment in the business. We did used a securitization to at that time to basically create a more efficient way to finance our balance sheet so we could compete with banks. And that was really a big catalyst to our business to help us grow it.
Can you
Um,
break that down for us dummies? Like, what does that mean?
so we have a balance sheet, just like a bank. And just like a bank, we have equity capital, and that capital came from the founders of the business, myself included, as well as this new private equity infusion. That's the equity base, just like a bank. So bank has, they call tier one and tier two equity capital. We have just equity. But equity obviously has a high cost of capital. And so when you lend money at 6 or 7%, you can't achieve a good return. So you have to leverage your balance sheet up just like a bank. So a bank borrows money by issuing corporate debt. They borrow money by borrowing money from you and I as depositors. We
Yep.
obviously are not a depository institution. So what we are able to do is effectively issue bonds in the capital markets that were AAA, AA, single A rated bonds to drive our cost of capital down so we could then offer a more competitive product. And that's that sort of the financial technology I mentioned called securitization that we've been able to utilize in our business.
Got it. Got it.
That
Amazing.
really, that was really kind of in 2012 was a pivotal time where we transitioned from, just having a pool of capital to actually having a very low cost pool of capital that allowed us to scale our business up. And so over
Got
time, what we've done is we've stayed kind of in the lower end of the middle market and grown our balance sheet, and our loan sizes have grown up, and that's kind of brings us to today. So maybe it's worth mentioning kind of where we stand today. So since we've started, we've closed almost 650 loans on real estate, so 650 properties in 40 states. So we've got our tentacles out in all sorts of different markets, 40 different states, and I think we're pushing almost $7 billion in total lending volume that we've done since we started the company.
That's amazing. That's incredible. Uh, why did you do it? Like, what drove you?
So I guess for me, well, I guess I have to go back to like what is like my inner sort of desires and what
Yeah.
burns on the inside. Um, Kind of a funny thing. You never know how things react, but I vividly remember my college football career, which had a great high school career, got me a scholarship. Um, my college football career maybe didn't turn out as good as I'd hoped, but like I mentioned, I did well in school, and I remember two or three meetings with the head football coach at our school where he would severely criticize football and blame it on me focusing on academics. And he made a couple of comments that I think about almost every morning when I wake up. And maybe it was his way of, as I think back about it, it was probably his way of motivating me. And it did, but he basically told me I was going to be nothing in life. Um, thought I'd be just an hourly type employee, didn't think I had it in me. Um, I think it was just a way of kind of challenging me, but I remember him telling me that. And so in a way, that criticism and or motivation, whatever you want to call it, I think about it every day, and it leads me to sort of want to prove him wrong, if you will. And so,
That's
um,
incredible. Do you
yeah,
feel like
so
you have proven him wrong, or do you feel like you're still trying every day?
I think the first business was proof, but
Yeah.
I want to do it again. And so I guess that was the initial motivation, was to maybe prove him wrong, that I could become something of significance, at least in my own little world, when he said I couldn't be. And then above and beyond that, as an entrepreneur of a couple businesses, like I said, I think probably the thing that's most gratifying is to take an idea, sit on a cardboard table, have nothing, have no customers, and and figure out if you can actually deliver a service out into the market that's of interest, and then have a team that you work with that you like, to see them grow and have to navigate and call audibles at the line of scrimmage and figure things out and build a team, and that to see people grow. We've hired, young people out of college that were interns, and today they're some of our top producers. Like that's the thing that kind of keeps me going, is to see the evolution of the team and to help individuals grow. I wish I could do more of it. Honestly, I end up doing a lot. I work a lot in the business instead
Yep.
of on the business. So I probably don't do as good enough job managing, leading, or mentoring. But to see the team sort of grow is the thing that kind of keeps me coming back.
Were there ever one or two moments where you thought, wow, it's gonna fail? I don't know how I'm gonna get through tomorrow.
Yeah, that's a great question, Jeff. I would say the the one thing that stands out in my mind at A10, like I said, we started the business right before the great financial crisis, and we're in the depths of it, right? We had capital, but not a lot. I'd mentioned that we had needed to um, get more capital into the business to help it grow. And so we went through a process of interviewing or pitching. I think I probably talked to 50 or 60 private equity firms, and all but two of them said no, because at that time commercial real estate was definitely out of favor, right? Because buildings that were worth 30 million were selling for 10 million because of the great financial crisis. So everyone was scared to death of investing in commercial real estate, whether that's debt or equity at the time. And truthfully,
Yeah.
that's the best opportunities when those situations happen. But it also makes it so we had all this great opportunity on the front end to deploy capital, but we needed the capital. So getting the capital was extremely difficult because of what was going on. But anyway, we got down to a couple of private equity firms, and we picked one. It was a financial, very substantial New York-based private equity firm with a focus on financial services.
Hmm.
And we went through a process, due diligence process. They hired third-party consultants to diligence our company, diligence the market, and everything checked out better than expected. So our loan portfolio was better than expected. The market opportunity because of dislocation was better than expected. Our financials were fine. And so they flew me back out, or I went out to New York to basically have sort of a pre-closing sort of meeting. We were a week away from closing where they said, and maybe it was a month, I guess, before closing. And they said, things are going well. We want to close. We want to really jumpstart the business. So, Jerry, um, have your team build your pipeline up as much as you possibly can so the day we close, we can deploy a bunch of capital. So we did that and we signed
Hmm.
up a whole bunch of deals. And I distinctly remember that was in November. On December 20th, excuse me, December 15th, they called me on a Saturday, which was odd. And because of all the things going on and during the great financial crisis, there was flare-ups like in Greece and Europe, and the partner at this private equity firm was nervous about the world economy. And despite the fact we were literally ready to close that week and everything had checked out, they pulled the plug on us.
Oh my God.
Literally pulled the plug on us. At that time, we had built up a pipeline, a business. We then couldn't deliver on it because we didn't have the capital. And we had to basically hold the team together, number one, keep them confident. And number two is
Yep.
most importantly with our customers, we had to figure out how are we going to deal with this, right? So I was able to talk to a handful of customers and sort of um, politely back out of situations and not leave them in too difficult of a lurch. They had other options, or maybe it was a refinance. But then there were certain customers that were maybe buying a property where they needed us to be there, and we basically are a couple of our founding partners made put in bridge capital so we could then fund the loans to make good on our sort of moral commitments to customers, and we got
Yeah.
through it. And then a year later, the second private equity firm that we had sort of said no to, they came through. HIG Capital came through and honored the original terms of their deal, despite the fact we went another direction for 6 months, and so we got that deal done. So that was a period of time where I didn't know if we were going to come out the other side. And if we didn't get that deal done, we probably would have wound the business down and called it a day. But we got through it, and here we are.
Yeah. I think that like one of the lessons from that story, at least for me, is I say this a lot, but it's really easy to be a good partner when things are good. It's when things are bad that you see what real partners are like. And HIG showed, they could have put a gun to your head if they wanted to at that point.
Yep,
And
they sure could have. And some of our founding partners, one was a family office, and they provided, basically some bridge capital to allow us to honor our, get our moral commitments to
that's
borrow
amazing.
this fund. Yeah, so we got through it,
Yeah.
and sure.
Yeah, that's incredible. I'll go back to something else you said about how part of what drives you, a lot of what drives you now is your team. And, I've been exposed to a lot of different members of your team just in being a customer, and you have a great team. So how are you recruiting people that fit your values? And because I think in finance, it's really easy to find smart people. It's really hard to find people that have the right personality, that are personable, that are kind, that are just open, honest people. And everyone that I've met within your team fits that. How do you do that?
That's a great compliment, and I think they would appreciate knowing that. But um, it's building the culture and getting the right leadership team in place. And in a sort of a weird way, we maybe have a unique advantage. Our business, again, is a nationwide, sophisticated commercial real estate lender. Most of our competitors and our business probably should be sitting in one of the major markets like New York or Chicago or LA, right? That's where the sort of the real estate capitals of the world are, but we're sitting in Boise, Idaho, of all places, right?
Right.
So we've been able to, through our prior platforms, recruit in and bring family members back into the team. So we have, sort of people that have been with us for many years. And then we have a really cool business and probably the only, I'm not probably, we are the only nationwide, sort of debt fund type commercial real estate lending platform in Boise. So I think we offer a unique opportunity for employees. So we're able to recruit employees that come, they're good people, they have really good, values based here in Boise. And then they come and they stay. So I think the average tenure of our leadership team is probably 12 years. The average tenure of our whole company is probably pushing 10. That's unheard of. If we were
Yeah.
sitting in New York or Chicago, they probably would be tempted to go to other opportunities. And I think we provide one of the better opportunities sitting here in Boise.
Got it. That makes a lot of sense. What's next for A10? Where do you want it to go?
So what we've built over time is a very solid and battle-tested platform. So we're full service. We have an origination team. We have an underwriting team, which sounds like a novel concept, but a lot of our competitors outsource underwriting to a third party. We do it all in-house. We also have
Hmm.
in-house legal. Again, a lot of our competitors will outsource the entire legal due diligence and document process to a lawyer who then will, submit an invoice at closing and upset a lot of customers. We do most of it in-house, so we keep our costs, I think, relatively, reasonable. And then most importantly, we do servicing on the back end, so we're rated primary and special servicer. We have this
Yep.
platform that we built over time, and up until about 2 or 3 years ago, we basically sat down and said, how can we leverage this platform to do more and broaden our capabilities? So a couple of years ago, we well, up until then, we were a balance sheet lender, as I mentioned. Our loan sizes were sort of like five to capping out at 25 million, kind of the
Hmm.
lower end of the middle market. So knowing that we had this platform that could do anything, we wanted to sort of add capabilities. So a couple of years ago, we added our first credit fund. So the credit fund does the same thing the balance sheet does, except for it does loans 25 to 100 million. So now we've significantly broadened our ability to attack a larger swath of the market. And then
Yep.
most recently, we've added some separately managed accounts that have a target of, I'll call it core plus properties, which is to say, lighter transition, higher quality Class A multi and industrial where there's not a huge business plan. And those are going to command the lowest pricing, lowest spreads in the market. Historically, we couldn't have played in that area because our return hurdles were higher, but now we got the
Right.
separate account that can accept those lower returns. And so those also target sort of loans 25 to 100 million, but are going to have much lower, much tighter pricing. And so we're now able to, sort of offer a much broader suite of offerings to real estate investors like yourself, depending on what the situation is, whether it's heavy value add, heavy transition to light value add, larger deals, we can do it.
Got it. And if you can't say this on here, totally okay, but are you able to say what kind of range of spreads would that be?
So on our core plus bucket that is targeted for the light transition, those
Yeah.
spreads have a two in them.
Hmm.
That's an area we couldn't play in the past. So
Yeah.
that puts us right in the mix, I think, of
Amazing.
some of the larger debt funds and even some banks, quite frankly.
Yeah. Yeah. That's incredible. Um, let's assume, and I know we're over on time a little bit, but I'm very curious. Let's assume you sell A10 tomorrow. Do you take another ride, or is this the last one?
Well, that's a good question. I haven't thought about it too much, but in my perfect world, if that were to happen, I would still stay involved in A10. At this point, I've built a lot of great, high level, deep industry relationships, and I think I can help, nurture, the company going forward. Ideally, maybe I don't work as much. I probably put in, 78, 80 hours a week right now, and be nice to dial that back a little bit, but we'll see. We've got a lot of work to do between now and then.
Yeah, I get it. All right, last question. Uh, you started you've started a number of companies that have done very, very well. I'm going to assume that A10 you came to A10 with a lot more wisdom than you came to the aviation company with. If you had one lesson that you wish you had had when you were starting the aviation company, what would that be?
I would say, interestingly enough, the thing that I wish I would have done differently was, and we're both in the organization, but this YPO organization has been tremendous in terms of building relationships, and I didn't
Yep.
get involved in that until 6, 7 years ago. Had I done that back in my 30s when I started it, I think the relationships I would have had in all the industry and all the business would have been deeper. So I think what I've learned is that those high value, high level relationships in business matter a ton, and I didn't maybe appreciate it.
That's great advice. I 100% agree with you, but that's great advice. Um, uh, Thank you so much for your time. We're going to put up your contact information. So if anybody wants to get in touch with you, you're good with that?
Of course.
But this is incredible advice. I'm so impressed by the journey that you've been on and what you've accomplished. And I love the fact that it came out of somebody telling you you couldn't. Because I think I'm
Yeah.
probably the same. I don't know that I have the one incident I can look back to, but I think I'm probably the same. It's somebody telling you you can't do it, and you said, "Screw you, I'll show you," and you did.
Yeah.
And
That's
so
right.
really, really impressed with that. Thank you so much for your time. I'm excited to continue to work with you and can't wait for our next deal together.
All right. Thank you, Jeff. Appreciate it.
All right. Have a great day.